Patrick Karim from Northstar Badcharts.com is back to give us his technical analysis on metals and miners. This and more on this week's episode of Metal Money. I'm your host, Patrick Vieira. Patrick Karim from Northstar Badcharts.com. Welcome back to Metal Money. How are you doing?
Hi, I'm doing great, Patrick. Thanks for having me on.
Glad to have you back on. Patrick, last time we spoke back on January 25th of 2022, earlier this year, you mentioned how we are seeing wake-up signs for gold and silver and how the basing of the two metals may be behind us. And despite silver dropping about $1.50 3 days after you made that call, it bounced back and you were right, my friend. Can you tell us what led you to make that call?
Well, I always try to dice. So there's a price action of silver and then gold and then the whole precious metals complex. And I always try to find tangents and try to dice up the action with using a different type of charts, different time frames. And even like with racial charts, silver versus Russell, silver versus the SPX. And silver, the big clue was it was above, the price action was coiling down towards an inclining 3-year moving average. And from a probabilities aspect, since the 3-year moving average is kind of important, you had to guess that that's a dip you should buy and the rally should go up. And that's what it did. It could have, of course, it could have broken down and then we'd be talking about bear market. But if you're already above a price action moving average that's inclining, you have to assume that trend will continue until it closes downwards. You can't always live in fear. Oh man, what if there's a deflation event? What if this is the end? Look, the price action is trending higher lows. So you got to look in that direction.
And Patrick, Q1 is in the books for silver. I want to know what's your take on silver for the first quarter of 2022 and what are your probabilities or expectations for silver for the rest of 2022 in the short term?
Well, silver in Q1 it had that explosion right on the smaller time frames, but it closed. It didn't do a new high above above $28. It's still hanging in there. So Q2 is definitely going to be a quarter that we're going to have more insight into where silver wants to go. But look, if you look at the miners, what has happened since the last time we talked is the miners has started outperforming the metals. So even if the silver is doing not bad, it's consolidating, waiting to maybe go challenge those higher areas around 28. Yeah, the SILJ, the silver junior miners to silver ratio is moving upwards. The junior miners in silver are outperforming the gold junior miners. So when you got the silver junior miners, it's like the most volatile and usually the ones that when they start outperforming its peers, that's a very bullish sign for the whole sector. So money flows are going into those junior miners, the riskier assets. And this is like a wake-up call, guys. If the miners are outperforming the metals, especially the juniors, then something special is happening right there. So it's a question of time for this to start moving in lockstep. The metals woke up, junior miners outperforming, then silver will go up to the next leg, and then the junior miners will outperform, but even more to a higher percentage degree.
Okay, hold that thought. We're going to touch on the miners in just a bit. I'm glad you brought that up. But first, though, got to ask, are we clear of sub $22 silver?
If you're talking to me that there could be some type of a crazy deflationary event when there's a spike down, but if I look on the quarterly chart or the monthly chart, I just see a wick. So it could go down like crazy, but after that, they print so much more money or people think that move was exaggerated and they buy it up. It's always possible to have some crazy type of selling event where in a few days it could drop $2-3. That could happen. But you can't put sell stops and expect the price action never to fluctuate downwards. And this, it could be a spike. You got to take a step back with silver, even with gold or these instruments, and look at it from a monthly close basis at the minimum and see if you're carving in higher lows. So look, that $22, $20, it's getting to be a lower and lower probability. But any spike down that could come down and touch that 3-year moving average or touch down to 20, it's always a possibility, guys. So never go full full margin, full levered up, expecting the price action never to go back down there. It can, but I don't expect any type of move down there to last a long time and be the beginning of a new bear trend. For me, that's probably the greatest buy the dip type of plays if ever we do get that type of volatility.
That's a great point. I'm sure the investors will appreciate that. And you recently put out a chart on Twitter titling it Silver's Simplified Journey. And you said how silver is still on track for an uninterrupted run to the $48 level. Can you go over this chart with us and explain it a bit?
All right, guys. So this is a Renko chart. Renko, I believe, Japanese, man. They came out with Japanese candles, and they have the Ichimoku cloud, and here's the Renko chart. So first thing, guys, if you're new to these Renko charts, you look at the top left, and you see here 3.5. So that's a $3.5. So each of these blocks is worth exactly $3.5, and it's on the monthly chart. So it's on the monthly close basis. So this means that every time at the end of the monthly close, if we're able to close $3.5 above the previous close, then we lock in, we draw in a new green box. Whatever happens after that, the price goes down $2, goes down $3. It could go down during the month. It could go down $6. But as long as it closes back within that $3.5 box range, then we're reducing noise of all that small time frame volatility. We're reducing that, and we're living in that box. And every time we go up and we could lock in $3.5 higher above the previous box, we lock in a new green box. So look at that. This is like since the 1970s, silver has one nice run, $31.5 of always constant. Of course, it fluctuated. It could have taken a lot of time. It fluctuated, but overall, it just kept going up in a nice trend. It did the same thing here out of this after the GFC crisis. Even here in 2003, it was already starting to move up. The GFC crisis, it closed $3.5 below the previous close right here. So we had a red. But after that, it did another $31.5 move uninterrupted. So that's what I mean by uninterrupted. It means it stayed within that parameter of the Renko chart, that $3.5 fluctuation. It always maintained it. And that's the macro tidal waves you want to run. Whatever drove this, high inflation, real yields, negative real yields, DXY going down, whatever it is, this is what it generated, a beautiful up move. And look, we're in the third box already. So after the March Madness, where it dipped back below, it's been going up by $3.5 increments all the way down, up. And until that reverts, until we have a close, I think we have to close at $21, below $21, Patrick, to get a new red box here. So until we have a monthly close below $21, whatever happens now, it's noise, and you just ride that long-term meaningful trend.
Getting back to miners, along with the two metals, you also, of course, mentioned the miners and how they were doing. First, Patrick, can you tell us what your technical analysis is showing us for miners? And second, what does that then mean for the metals, gold and silver?
This is the gold and silver index, the XAU. I like it because I have data like till the late 90s. There's not sometimes for these miners, we haven't had the like gold gold ETF. We have Barrick or Newmont we could track, but this is the entire gold and silver sector index for the miners. I have the monthly close chart, and I have here a 16-year moving average, super slow moving average. The trader is going to go crazy. Patrick, what are you doing? I can't play that. But the takeaway is, if you're bouncing on that 16-year moving average or getting close to it, if you just happen to be a trader, these bounces are actually great entries. If ever the shorter time frames in line with an up move, you could expect that 16-year moving average to hold up. If I bring your eyes just down below here, I have the stock. Could have been any indicator. Here's a 16-year stock, 192 months. Here's the 8-year stock. And those are not just haphazard. The 8-year, we know it's a gold cycle. The 16-year is 2 8-year cycles of gold put together. So it's meaningful. I'm customizing my indicators and my moving averages to fit some known cycles in the precious metal sector. And look at that. As a TA, this is the 16-year where it is. What you always have to try to do is, how was the price action behave when you had that type of setup, guys? And if I bring your attention all the way back to this box, we're exactly the same situation where in 2005, the XAU, the gold and silver index, was just coiling, bouncing, where we had that nice move that brought us all the way to the top to 2011. It's the same setup here. And look, even here on the shorter time frame, 8-year stock indicator, we just had that up thrust that brought us into the bull zone. We went down, and the wires are already turning back up, going back in. So we're hanging in there. We're still in the bull power zone. All this move we had down since those peaks, hitting that, it was just a consolidation, an opportunity to buy. A lot of fear. People think it was the end, but look, higher lows. Even since 2015, the miners have been doing higher lows. So it's tough. There's a lot of deniers out there, but the more they wait, the more these higher lows, eventually they're going to fail, right? We're going to be at the top. But right now, you're kind of lucky because this is probably the lowest risk, highest reward opportunity that has passed the corner. We're just turning the corner in our favor right now. For the metals, if the miners are doing good, the metals are doing good also. So they, as long as the miners keep going up, then they're sniffing out that the metals will keep their price or keep going up in price, and that's what you want to see in a healthy precious metals bull era for the complex.
I want to ask you about the USD. The last few weeks, or even let's say for the past month, perhaps, it looks as if the dollar is sort of consolidating between the 98 and 99 range on the DXY. Where do you see the dollar headed short term?
Well, there's a lot of focus on the dollar. I looked a lot at the dollar, but for the precious metals complex, what's more, you have to look at a segment of that DXY. So the DXY is primarily it's like it tracks practically the Euro USD, right? The 58% of the DXY is the Euro USD. But the Euro USD doesn't track as well the precious metals complex as the Canadian USD pair. So I would definitely focus more. If you don't want to get whipsawed, oh, why is gold going up while the DXY is going up? Or, when you see those periods of non-correlation. Here, guys, I have the Canadian. I'll remove the moving averages. Here's just a regular Canadian chart versus the US dollar. Here's the bull run 2003 in the precious metals, the peak. Right here, it broke out already. And here's another bull flag, pole flag on the breakout line, bouncing up for the Canadian dollars versus USD. But here's the magic. Here is why you have to look at that and why it's going to impact what you play. Let's say you're playing the sector that we were looking at. This, guys, is the XAU chart I just showed you previously. Look at that. This is the chart that tracks. So capital flows going into Canadian dollar instead of going into US dollar. This is what is the impact, the correlation for the miners. It's all that money going to the miners at the same time. And this is kind of front leading. So there's an arbitrage play. Either you could go long, hold Canadian stocks and get that extra boost from the Canadian dollar appreciating versus the US dollar. And you get the bonus from that reinforcing the fact that the miners themselves will go up. So it's like a self-fulfilling engine where Canadian stocks, Canadian miners is the place to be going forward until this plays itself out, until we have a topping pattern, until the momentum breaks down. But that's 6-7 years in the future, Patrick. Of course, it could be a deflation event. Here's the 2008 crisis, but you can't live in the fear of that happening until it happens. You're carving out higher lows, and both are going up together, higher lows, the miners and the Canadian dollar versus the USD. So especially once you're just breaking out of an important base, these low risk, high reward opportunities, they don't happen often. It took 7 years to build that base, or 8 years. The further it gets stretched, the riskier it gets. So the low risk entries they're happening just now. It's crazy.
Okay, that's some good stuff there, Patrick. Appreciate it. Last question here. Putin has hinted that gold will play a role as money for energy. What, in your opinion, happens then to the USD and maybe even for gold if this becomes accepted and adopted?
Man, I've come to the conclusion that I know nothing, Patrick. So there's that. Usually it's rare. We like always trying to find one narrative that fits one price action movement in whatever direction. But we have to come to the conclusion that it's a multiple of these factors. Maybe what Putin's, let's say, does it go back a ruble? Well, what is that? Is that 5% of the actual movement of the entire precious metals bull market complex? Is it 10? Whatever it is, the markets, even before he said that word, markets were probably pricing in the possibilities or the probabilities of that possible direction that he's going to take. So it's, I'd love to talk to you about this like for hours around the coffee table. But at the end of the day, whatever he does, the gold market has probably already priced that in. So I wouldn't trade off any type of news that Putin would do or any other government, but just look at the actual price chart of gold. Is it breaking out? Is it giving you signs that it wants to go up higher? That's going to be something that you'll be able to, get some return on your investment rather than hang on Putin's word. Because what if he changes his mind? What are you going to do? Sell your gold? Gold could still be going up, and Putin could decide to not back the ruble by gold. It's for me. Those are two different things. They look like they could have the impact that you think it could have. But honestly, the loss of purchasing power of the US dollar since 1970, since it got unpegged from gold, that's something that's important that I could see in the charts that really tracks gold's movement, gold tracking your loss of purchasing power way more than any one event of a country backing up gold, their currency by gold.
All right. Patrick Karim from NorthstarBadcharts.com. I want to thank you for sharing your outlook and analysis of what the charts are showing, and I hope we can do this again soon.
I hope so too, Patrick. Take care, man.
That was Patrick Karim from NorthstarBadcharts.com offering up his outlook on metals and miners. As always, please leave your thoughts in the comment section below and remember to keep it liquid, keep it real, and I'll see you on the next episode of Metal Money.